Today, we got Jen and Rene from California who jumped back into the market this year. And we're going to go over a JWB property similar to what Jen and Rene bought and pick their brain about what makes it a good investment. Find out how Jen and Rene have been able to get over 17% ROI on their portfolio, not including appreciation, and why they've referred so many of their family and friends to JWB. We all are officially live on Facebook for the Thursday edition of the Not Your Average Investor Show. Today, we're doing the JWB Rental Property Investor of the Week. If you want to own rental properties, you are in the right place. If you have a property in Jacksonville, Florida, and you want to know the best practices for property management, you're in the right place. And if you're a real estate professional, wants to gain an edge in the Jacksonville market and maybe find some great ideas to make a little bit of extra cash alongside of your clients, you're in the right place. And the next place to go after this is chatwithjwb.com. I am your host, Pablo Gonzalez. We don't have Greg with us today, but we have legends of the Not Your Average Investor Show community, longtime JWB clients, two of the most talented people that I know, my favorite couple to hang out with online and in person, Jen and Rene. Welcome, Jen and Rene.
Hey guys, hey everybody. I see everybody. I'm like, the computer's far away. I'm like trying to read everybody. Hi Leo, hi Lee, hi Nadeem, hi everybody.
Yeah. Hey, that's my job, Jen. I'm gonna welcome the community right now. John Hannon, good afternoon. Nadeem, good afternoon. Hello, JWB family. Leo from California, good morning to you, my friend. Carl Thompson is in the Mile High City today. Welcome, Carl. Who else we got? Greg Stone, howdy, right back to you. Bill Shields with his now trademarked yo. Well, he's really just going into the Spanglish thing. He's got yo amigos. It's like English slang, Spanish language. I'm into it. Trish Dixon is back from Raleigh, North Carolina. Trish, it's good to have you back. That's you're new around, and it's good to see you return. Her Francois from New Jersey. Hello to you. And I just want to give you all a little tidbit, right? Like I know that we've got a lot of people that come often, but sometimes if you don't come that often, you realize that when you're chatting with us in the chat box, you have to first highlight panelists and attendees so that everybody else sees it. It's just defaulted to only panelists, so only I can see it and Jen and Rene can see it. So if you all want to talk amongst yourselves, Herv, Trish, let me see who else. Bill also had that going on. You got to just change that thing so everybody gets to know each other. Wendy Alvarez already coming through. Hi, Wendy. Good to see you. I think that you might be new here. Welcome to the family. If not, maybe you've been a couple of times, but already handling like a pro in the chat room. So happy to have you. And second is, if you want a question, Jill is new. Jill Richard, welcome, Jill. If you got a question and you want it asked on the show to Jen and Rene or to myself, I ask that you use the Q&A function. It's a separate chat box, and the only reason I ask is literally just because of lack of talent on my end, right? The chat moves really, really fast, and the Q&A, it just kind of like parks there for me, and I can really keep track of it. Victor Lena, is good to have you. Alejandro Lopez from Northern California, from your neck of the woods. Jen and Rene, welcome, Alejandro. Good to have you here. Hetty Pritchard, a bunch of new names, and Jill Richard, a bunch of new names that I don't recognize. And this is a special call to be a part of today, because normally what we do on Thursdays is we just go through a property of the week and we analyze it. And it's usually me, who is a outside consultant to JWB, and I do their content and all this stuff. And Greg is the expert. And, there's always somebody from JWB that works for JWB on the call. Only the second time that we've ever done it where nobody here works for JWB, right? Do you guys work for JWB?
Nope, but we're huge fans.
But you're fans. I'm a huge fan too. And yes, they are my client as well, but I'm legitimately a huge fan. So this is the rare opportunity where a company literally just puts on display their clients and people that work for them. There are no adults in this room to put like a spin that is put in any other way. So we're just going to go through Jen and Rene's story. Like we said, they're from Northern California. They've been investing with JWB since 2012. They just earlier this year decided to buy back into the market after an interesting conversation that Jen and I had to start with, and we're going to talk about that. And this is a no holds barred. Ask us any kind of questions about the client experience. I'm also a client of JWB. Ask us any kind of questions on the client experience side, and we're going to answer honestly. If you have a really tactical question for JWB, the best place to do that is chatwithjwb.com. You can just go to that link. I'll put it in the chat as soon as Jen and Rene start spitting fire over here. And you just go into the calendar, you set up a date, you hop on with Courtney, and it'll be all about you, all about whatever questions you need answered. All right, without further ado, I feel like I just spoke for way too long. It's your turn. Jen and Rene, tell us a little bit about how long you've been a client for JWB, when you started investing, and kind of just give me like a 2-minute, 3-minute spiel of just like the overall, what you believe about rental properties and whatnot.
Okay, well, you guys all see me in the chat. This is my hubby. This is Rene. And I'll give you a little quick background for those of you guys who haven't heard my little story. I'm originally from Jacksonville. So born in Arlington, grew up in Orange Park, moved out to California when I was 22. And start my career and do the whole thing that we do when we're in our 20s and we spread our wings and fly. Had the starter marriage, divorced from the starter marriage, got into the dream marriage, super happy. We met in dance class and we teach dance when it's not a pandemic, but we're creatives. And Rene is a graphic designer, a comic book artist, super talented. I am the marketer, writer, and I own Rockstar Marketing, which is a digital marketing agency. And back when I was starting my business during the Great Recession in 2009 was when I launched Rockstar Marketing. I was studying a lot of Robert Kiyosaki books, Rich Dad, Poor Dad, and all of his books. And I knew that investing in real estate was something I really wanted to do, but I had no idea how to do it. And I lack the talent of flipping houses. I do not have the patience. I do not have the skills, even though my daddy was an electrical contractor and I come from a blue collar stock that knows how to do that. Somehow it passed me over. And I also cannot draw stick figures. So I need to outsource to those that can. And JWB was the perfect prospect. And here's the real fun punchline that everyone loves. I know Marilyn enjoyed this story. So I told my family, we came to Florida, visited the family, told my family, okay, we're going to be investing in real estate with this company called Jacksonville Wealth Builders. This is in 2012. And my parents were like, what? And are you sure? And that sounds like it's too good to be true. And my whole family in West Side Jacksonville, as we're visiting my grandma, she's still there. She's 97. She's still there on Waterside Drive. They're like, no, this is too good to be true. I said, okay, this is something that I have been deciding on doing. This is the right company for me. And I cannot tell you in the 3 years of research of what I've done, how I'm doing it. But let me just tell you, this is the company I'm going to work with. Why don't you come with me and you can meet them? Well, guess what? My parents ended up buying a property the same dang day we did. So yes, and then we talked my other grandmother into investing. So yes, we do have 3 generations investing with JWB because of how awesome they are.
That is awesome. That is awesome. And, one of the things that I find really interesting in your story that I relate with is the fact that you live in Monterey, California, is expensive. You don't own your own home, but you want to build wealth through real estate. And you made the decision that you're going to buy rental properties to fund your future home purchase, as opposed to the other way around. A lot of people kind of feel that way, right? Like, was that, Rene, can you talk to us a little bit about when y'all made that decision?
It was around the same time because, again, Jen was the one that was always doing a lot of the studying. Back when she was starting her marketing business, I had this, she likes to say, the steady Freddy job. I came from commercial printing, 20 plus years working in that business, learning the different aspects of that. And really, I was working and, I was doing well and supporting her. At the same time, she was doing all this studying, like starting a business, investing, what business should she get into? And so I think she had a period where she had some really intensely focused concentration in like asset building and starting a business. So I think it just got to a point to where as her business started to grow and started to really take off, especially like in the last 3 years. And I left that, I would leave that job eventually about 2 years ago, coming up on 3 years. And I worked for her, but the decision was always in the middle while she was growing her business, knowing that our future was something we had to think about.
Yeah.
And how we had to put our minds and our muscles and our money to work for us. And investing was one of those ways. There's lots of ways you can invest. You can put your money in the stock market, you can invest in lots of different things, but like real estate, like you can't go wrong with that. I mean, if you're able to save up, and if you find the right people or organization like JWB, I think it was just a matter of just like, I mean, I just kept going with it, and here we are, and we're still doing it. And even where I'm kind of starting over with my career, I am working for Rockstar, but I'm also working as an artist, freelance artist and designer. I'm in that same boat too, because now it makes me have to think about that, because I don't have this steady job that is like, paying for like insurance or dental or whatnot. But even more so, I have to think more about like how I can maximize my energy and my output and my throughput, and how I would focus on get more focused into real estate with Jen. I mean, that's where we're at right now, is just working toward that, to build up my work and my efforts in that direction. Because yeah, you're right. We talked about this last time, but like we kind of have Hawaii, and it's not immediate, and that's maybe like the 10-year plan, but like that's going to take some planning today, right now.
Yeah.
To do. So I'm 100%.
That certainly sounds like something worth planning for, man. I'm living in Hawaii. I'd love that.
I wear this every day. So this is kind of like a subconscious reminder and a goal.
Yeah.
It's with me every day. So
that's very cool. That's very cool. And something that we're not going to dive too deep into it, but I find it really interesting is the fact that y'all are professional dance instructors, and you have this like little community of Hawaiians that you go to Hawaii and you host these like dance instructional stuff. And by the way, one of my favorite follows on Facebook are Jen and Rene, because they post pictures of them just like dancing in their garage and in their kitchen. And it's like the best mood you're going to get into just scrolling through Facebook. Definitely beats any other kind of like political thing or whatever, right? Like watching
social media for fun.
Yeah. So listen, speaking of stuff that requires planning, this is what your portfolio looks like. I know that we sent you this ahead of time. And just to kind of show what the power of planning ahead of time looks like. So far, you invested, the first house that you bought was in 2012, but thus far across your portfolio, you're getting a 17.16% lifetime return on your investment, which is pretty awesome considering that does not include appreciation. And we're going to talk about that in a second. You've been around for 9.1 years, lifetime net rental income in the last 9 years of $16,000, total return cash flow. So that's cash flow, right? Net rental income. That's positive cash flow of $16,000 over the last 9 years, and a lifetime total return of $45,579. We'll explain that a little bit later. And you see here that's, basically having had mostly one property since 2012. Then you got another one in 2017, and then you picked another one up in 2021. And I would love to ask you about this one in 2021 before we get into today's property. Jen, when I remember having this conversation with you specifically when we were going to bring you on as a guest on a Tuesday show. I think it was probably like August, September of last year. Right. And I remember the first thing that you asked me was, I mean, I love being a JWB client, but like, I've been reading all these books. Isn't the market going crazy? Like, is it a time to buy real estate right now? Can I tell people that? And a couple months later, you bought another home. Right. So can you tell me what were you thinking before from like what you were reading about the market, and then what kind of like changed your mind that made you think, you know what? Yeah, it's at a much higher price than I thought it was before, but I'm still in on this for the long term.
Right. I think it's just a matter of, I was looking at prices just going up, and this is, so were we already in the pandemic? We were in the pandemic.
Oh, yeah. We're in the pandemic. Most of the show has happened within the pandemic.
Yeah. So anyway, okay, in Monterey, California, prices are nuts, absolutely like ridiculous. Like you can buy a shack for $1 million, and I am not exaggerating. Okay, not exaggerating at all. Look it up. It's just like, really. And so I'm seeing all these prices go up. I'm like, I've got the little critic in the back of my mind going, remember the Great Recession? Remember, what goes up comes down. Come on. And so I just kept thinking, well, maybe I'll wait. And also too, I was thinking I didn't really have that much saved. See, we don't have a big paying job. I do own a marketing agency, yes, but I don't get to keep all of my gross revenue. I get to net revenue. And when you have a team of 8 people and software and such, I wish I could keep all that money, but it's not mine, right? It's ours.
I know.
Yeah, you know this. We have to make our own retirement. We do not have pensions coming to us, right? And we know that Social Security is not going to cover it. So I was on the phone with Mike Stetson. God love that man. I'm so sad that he's gone from JWB, but I'm proud of him for what he's gone on to do. But we were talking, he's like, Jen, I've got this property and it's really affordable right now. And, prices are going to go up and interest rates are low. And I was like, I don't know, man. I don't know if I can do it. He goes, how much you got? And I don't know. I said, I think I got like 20,000. He goes, can you get like 25,000 for closing costs? I'm like, in a span of some time, yeah, I can get 25. He goes, I've got this property. Why don't we just get you on this property and like you claim it here, put down your earnest money. I'm like, okay. He goes, look, I'll get you. Like he made it so easy for me. And I knew that his heart was in the right place because I've known Mike from the beginning. He's so proud of us when we do acquire our next property because he knows that we have to save and scrimp and eat beans and sardines to save that money to get our next property, right? And we don't live a life of poverty. It's just that we just don't have like, woo, I've got a flush amount of cash. Let's do it.
Yes.
So anyway, I was like, all right. And it just made such sense, the interest rates. And there's the positive cash flow. And it's like, all right, let's do it. And then we did it. And now the prices have gone up even higher. Like all of my concerns of, oh my gosh, it's already so expensive. And then it just keeps climbing. I'm like, well, damn. But as long as the numbers continue to show positive cash flow, why not?
Yeah, that makes a lot of sense. I think you were there for the show, right? But like we had Tim Hicks on that was talking about how if you have the money to put down and the worst case scenario is that somebody's paying your mortgage for you and you're breaking even, then it just makes sense to continue to buy because it's never gonna, like the rent's not gonna go away. Like the asset class is not gonna go away, right? Like it's real estate. So I guess that's what you were thinking. And the moment that you found something in your range, you were able to take a shot at it.
Yeah, totally did. And I'm on track to buy yet another property before
Business is good, Jen. I like it. It's what happens when you're awesome at your job.
I mean, let's not forget that, the fact that we haven't been able to go and do as much social stuff. We've been saving a little bit of money during this pandemic. That's kind of a good thing.
Yeah. I hear that. And I feel that a lot too, right? Like the idea that since there is disposable cash flow out there right now for people that have been dining out less, have been traveling less, have, spent less on like nannies or whatever, because you just have to take care of your kid. And that's a really interesting point to bring up. If you have some extra cash laying around, you can either burn it on a liability or you can acquire an asset right now in this time of low interest rates, high growth, right? Like Greg, who never goes hard at anything, is going pretty hard at the idea right now is the best time in history to buy a rental property because of the low interest rate and because right now that the market is appreciating faster than usual. So you're going into it with some built-in equity, at least in the short term, right?
Totally. And Greg and the whole team at JWB, they break down the math. I will confess, everybody, I'm a really great writer. I'm a really great storyteller. We're really great creatives, but I am not a math genius. I balance my checkbook, but don't ask me to do calculus and trigonometry. Statistics I'm okay with, but I really need someone to really spell it out for me math-wise, because I'm not like Tim Hicks. I'm not that person who's going to generate the spreadsheet. I need help. I need the Lees around me. I need the Gregs around me. I need all the math geniuses to go, yeah, Jen, duh, do it. I'm like, okay.
Well, Jen, the good news, bad news is we're going to test that out right now because we are going to go to 5234 Hollycrest Drive. We're going to take a look at a property right now. We're going to test your knowledge. We're going to test my knowledge because I don't have Greg here as my crutch, right? And we're going to check this thing out. And I just kind of want to know if you were looking at this property right now, what you would be looking at. Let me zoom in some. I know that you're kind of far away from the screen, but for those of us that are joined, For our friend that is listening in the podcast in the near future here, we're looking at a $180,000 home. It's a 4-bedroom, 2-bathroom with a lease of $1,225. Yeah, that's a pretty good deal, man. And an estimated conventional financing total monthly cash flow of $151 and a total financing ROI of 7.68%. Jen, do you want to take a shot at explaining what you think about when you think about this total monthly cash flow? Or Rene, you want to take a shot at it versus the
Rene defers to me. Okay, all I care about in this whole scheme is what's the cost of the property and what's the cash flow. That's really all I care about. That's really like, do I have enough to buy? Do I have a good chunk of change to buy a $180,000 property? And what's going to be the cash flow? I know that sounds really basic, folks, but I need you to understand that JWB does all the work for you, illustrating why it's a good deal. And yeah, of course. Can I sign up right now, please?
No, I think it's always been great about showing these illustrations and projections, whatever you call them. And they always will keep in mind that, if you don't have the experience like we don't, they're very thorough and will present to you, how this could work or how your situation might apply and just help you out.
Yeah. Awesome, man. Well, I'm going to do my best at talking through this the way that we normally do on Thursdays. And full disclosure, if you're new to this call, I am not a real estate expert. I just play one on TV. I get to be guilty by association by a bunch of real estate experts. And I've been doing this now for a year and a half, which is crazy that we've built this community in a year and a half and this whole thing. And amazing.
Everyone will help us in the chat if we get something wrong.
Yeah. Help us in the chat if we get something wrong, right? But like normally when we go through this, we explain this total monthly cash flow. This is Chad Willis. You want to know the full address? The full address is 5234 Hollycrest Drive, Jacksonville, Florida, 32205. And Carl Thompson already asked in the questions, is this property available? That's a really good question, Carl. I don't have that answer because like I said, I don't work for JWB, but I know that a lot of the time, the reason why he asked that question is because a lot of the time when we show properties on the show, somebody's already put a deposit on it, right? Like Andrew Barnhill recently got a house. I don't know if this is his house, but somebody's already put a deposit. There's a really high velocity of inventory, but what you should know is that JWB looks at these houses as widgets. They have a whole portfolio of properties available that all perform the same way, right? Like it's all either cash flow, it's all cash flow positive. They all have a certain level of ROI. They have the same exact risk portfolio. So if this property and this cash flow and these financial concepts that we're about to go to makes sense to you, then just go to chatwithjwb.com. And I'm sure they're going to have something, like within earshot of this like price range or like this profile or this neighborhood, because they just have the same thing over and over and over of like 4,000 of these things that they've cranked out, right? So to give a little breakdown, I'm gonna do my best GC. This total monthly cash flow, what that represents is the average month that you own this property. This is the money that you're gonna make. This means that the average month, the typical month, you're gonna make $151 net positive monthly cash flow. I can attest to that because I've now bought 2 with JWB. Jen and Rene, what would you say in general in the 7 years that you've been or 9 years that you've been with JWB? Would you say that cash flow that they tell you is generally what happens, or how often does it?
Yeah, no, it happens. It happens. Sometimes we have a turnaround. We on our Barmer Drive property, we had a situation where we needed to evict the tenant, but JWB handled it really well. But guess what? I'm not stupid enough to like spend all of my money that comes in. I had that reserve. Mm-hmm. So the few months that we were without a renter, but I just know that JWB does a really great job handling everything. So I really don't worry about it.
Yeah. I'm in the same headspace too, right? So basically that $151 is the positive cash flow that ends up in your bank account every month. Jen, like me, we just kind of like put that cash flow away for whenever there's a turn, which tends to happen. Their average rate of stay per resident is a little bit over 4 years, right? So like every 4+ years, you can expect to have, a month and a half that there is no tenant in. And that's not calculated in here. You also you're not calculating the stuff that you pay, like your closing costs that happens one time kind of like fixes and tenant improvements and things that happen. That's not typical, right? So this is just the average month. And that's what this dollar figure represents. And Greg describes this as what makes the investment scalable, right? As long as you are in the positive cash flow range, then it's scalable because you're not having to come out of pocket every month in order to have this thing give you the rest of the 5 profit centers that I'm going to do my best to describe right now when we talk about this ROI. And just on a personal level, and maybe Jen and Rene, you can attest to this too. But I know before I got to investing with JWB, I know that I was looking at stuff like in Miami, where I was from, or maybe Northern California, where people sell you a rental income property, and you're like, well, if I'm only like losing $100 a month, but it's going to go up in price, then maybe that's a good investment, and who knows, right? Because then you're just betting on appreciation. The whole point of this is the fact that you're not losing any money every single month. It is making money every month, and then you get the benefit of the rest of the profit centers. Did I kind of describe that in the way that you guys feel?
Oh yeah. Oh yeah.
Yep.
We've discussed on this show all the different expensive real estate markets, and Monterey is ridiculously expensive. And I would love to own there, but if we did own there at this moment, we would be so house poor. We wouldn't be able to do anything else but pay for a mortgage. So to be in the Jacksonville market, where not only are you getting positive cash flow with your rents because the prices are so affordable, but you get the appreciation too, it's a win-win. It's a win-win. And Jacksonville has been on a growth streak since the 1960s. I was born in 1970. In a university hospital. It's been on a growth streak the entire time because there's so much cheap land. It's the largest city in the entire country. All of Jacksonville is all of Duval County. It's huge, and there's still room to grow. And JWB was super smart to buy all those properties. I mean, come on, guys, invest in Jacksonville. They're not paying me to say that. I'm not joking. Just do it.
That's great. That's great. Yeah. It's interesting to hear you discuss that, Jen, right? Because you're a Jacksonville native that left, and now you see it from the outside in. And while I'm somebody that just came, I'm a native from one of these expensive markets that moved here 3 years ago. And, landing here, it's almost like I see it with very different eyes, because I get here and I see the city as it is. And I got here to see a pretty complete product as far as the city goes already. I've been super happy to live here. It's over delivered in every regard that I thought it would. Like, I knew my cost of living would be lower and my quality of life would be higher, AKA I get to surf much more often. But I didn't realize that all the economic opportunity was going to be here that I've had, the network that I've been able to build, and the people that are moving to this city are really, really impressive, wonderful people that all see it's like in this critical moment of growth, and everybody's just really gung-ho about the future of Jacksonville, because it feels like natives like you have been seeing this future for a long time, but it hasn't been this close and people are activating. Do you, from the outside looking in, do you see kind of like this near future that used to be so distant before?
It is pretty remarkable. When I was growing up in the 70s, 80s, going to school, and I felt it was a backwards hick cow town. I don't know if you guys have ever felt that way. When you come from a small town environment and you need to get to the big city, I need to get to Los Angeles or San Francisco or New York. There was that mentality of I have to go somewhere bigger, because I just felt like Jacksonville was a good old boy network. And so, the big industries, military, lumber, tourism. But it wasn't that exciting to me back in the day. Now I'm looking back at it as a 50-year-old woman who has gone out in the world and done her thing. And I'm looking back at it, I'm like, dang, Jacksonville really has come a long way. And I won't say I'm going to move back, guys, because, I have Monterey. Why would I leave Monterey? And if I do leave Monterey, it's Hawaii, right? But I do go back to visit family. We go back. In fact, we're going to be back next week.
Yeah,
so
next
anybody
week
in Jacksonville, let's hang out. But the thing is that, it is impressive. And it makes me proud to see that Jacksonville really, I remember Jacksonville before the NFL even touched that. I remember being a kid watching on Wheel of Fortune that one of the prizes was a trip to Jacksonville, Florida. It was like, wah, wah. Like that was not exactly glamorous, but okay.
That's awesome. That's hilarious. Yeah. Wheel of Fortune thing has me going. And by the way, looking forward to seeing you next week for the record, right? We should post in the Facebook group where we're hanging out so that everybody can join us. Yeah.
Hey, by the way, can I be so bold as to suggest something?
You're the star of the show, Jen. Why don't you suggest what are you going to suggest?
I hope you don't mind, but I'd like to suggest meetups, if you don't mind. I'm just going to kind of be ballsy here. Listen, I live in Monterey with Rene in Monterey, and I would like to invite. We've got so many people from California, from the Bay Area. You are within an hour and a half of us. Hello, can we like get together and like have our own little meetup of like the Not Your Average Investor group? And why not? If you guys are like Nadeem, you're in your area, Lee's in his area, like everyone's in their different areas. Why not have face-to-face get-togethers? Like, why not? Can we do that? And it's like, and if you don't live near us, fine, come visit us. We have Pebble Beach. Hello. Greg came out over the Memorial Day weekend. So sorry to do that, but like, I really want to see you all in person, please. Thank you.
I'm like speechless, right, Jen? Because when Greg and I first got together to do this at the end of 2019, I'm like, listen, man, the whole point of this whole thing is a community, right? Like if you as a company can be the place that people get to know each other through, then that is the most sustainable growth engine. That is the most like transparent way to get great clients. And he was fully on board, right? And when we first started this January of 2020, it was just an idea. And now as you speak about it, and I see the chat happening, and we have multiple people like you and Lee and like Leo and Bill, and that just show up to the show regularly and are clearly just a part of, and Nadeem, and right, like that are part of this and are active contributors in the Facebook group and stuff like that. To think that there is going to be an offline meetup of folks that hang out with us online in person without us there is like the ultimate Shangri-La of the marketer in me, that all I want to do is create a community of people that hang out, that can exchange their own opinions, can just exchange value amongst each other without us there. So the idea of you doing this, and if anybody here is in Northern California and wants to meet up with Jen, I think that the Facebook group is a great place to connect with her. If you go to jwbfacebookgroup.com. And if not, Jen, should I share you want to just say your email, or what's the best way to contact you?
Put it out there. And you know what, honestly, JWB does not pay me to like say accolades from them. But if anybody on this call, whether you're watching a recording of it or you're live, contact me, jenniferfilzen@gmail.com, JENNIFER, F as in Fred, ILZ as in zebra, EN as in Nancy, jenniferfilzen@gmail.com. You're also welcome to text me 408-833-9868. And so, yeah, contact us. It would be so great to get together because this is such a great community and we all learn from each other and sharing ideas.
That's super cool. That's really, really cool. All right. Well, let's go to another pillar of our show, right? Marilyn Cotterman from Homosassa, Florida. Home of the manatees. You were supposed to say it, right? She writes, approximately how much money or percentage would you suggest to set aside for turnovers? How much do you guys have aside kind of like for like rainy day fund when you're investing on this stuff? Or have you thought about it?
So when we first started and money was tight, I would dip into the savings account that the JWE deposits went into quite a bit because, I was starting my business and I'm not proud of that, but that's what I needed to do for the first 5 years. And then finally, 9 years later, I have stopped touching the honeypot. I've stopped touching the bank, right? Did I say the wrong thing? I think honeypot was the wrong thing. Anyway, it was meant to be anyway, the point is that we just keep accumulating. And then as soon as I'm able to put a down deposit on something new, then I do. But I always like to have a reserve. So I prefer to have 6 months worth of rent, 6 months worth of mortgage on a property as my minimum, because that way if something does get tight, I'm not dipping into other funds to pay for the property. I want the properties to pay for themselves.
Yeah, that makes sense. And the mortgages are like 800 to $1,000, right? So I know that Greg said about $6,000 is kind of like the earmark number that he would say. I'm like, man, I'm gonna have like 10 grand on the side just in case, whatever. But I think that is kind of like up to you on where to do it. But yeah, I think that's 6 months, $6,000. That seems to be the standard. Jen, can you repeat your phone number again so I can put it in the chat real quick?
Sure. 408
Uh-huh.
833
Mm-hmm.
9868.
9868. All right. I'm sharing that in the chat right now. And I'm going to go back to this property so we can finish this breakdown here. Here we go. All right. So we just covered the cash flow, and then we went down a deep rabbit hole on community. And now we're back on the property, right? So the cash flow, again, that is just dollar in versus dollar out on a typical month. And this ROI, what this represents is the almost full picture of what we call the five profit centers of real estate, which are cash flow, right? Debt pay down. I know appreciation is one of them, but that's not included here. Oh, tax benefits, right? And inflation hedging, which is becoming a bigger subject these days. So inflation hedging and appreciation are not reflected in this number. What this number reflects is basically all money in versus money out and equity out that are completely controlled within the property line, right? So it is your down payment, your closing costs, your maintenance cost, your insurance, all these things that you don't pay every single month, that's included in this and amortized for the life of this investment. And then included as the gain is included the cash flow that you're getting, also the debt pay down, right? So every single month that your resident is paying their mortgage, they're actually paying down your debt. So you are gaining equity just based on that simple equation that happens every single month. And then the tax benefits, right? Like there's depreciation is something that happens within this asset class. And that is the idea that you can take, the value of the land plus the value of the property, and you can yearly depreciate the value of the property on your taxes in a way that produces a non-income, what's the term? It's like non-cash income event or something like that. It's something really fancy.
Okay. Yeah. You don't make as much money that month.
No. You make more money because it's saying that, like the hard asset, right? Like what's appreciating is the land, but the actual building in the sake of the CPA or whoever it is, that is clearly not me, they're taking that off of your income while you are actually making income on it. So that's what this represents. And that's a 7.68% ROI. As we've seen with Jen and Rene's properties, they actually have a 17.16% ROI. Jen, do you remember what you were expecting across your properties? Like what was the number that they put down there?
I think they put down 12%.
12%. Yeah.
Woo, yay, 12%. But we've definitely gone higher with that.
Yeah. And that's one of those things that JWB does that I've learned is their core value is to under promise and over deliver, right? So they're definitely putting in here numbers that they are sure that they can hit. And then, they expect to delight you with better than average numbers, but Greg's not going to say that. I'm going to say that when he's not around. Right. So, and then what we talked about, right? This appreciation rate, it's at zero here on this, it's at zero here on this evaluation. And the reason why that is because, as Greg likes to explain it, appreciation, you can only count on appreciation when you are accounting for a full market cycle, which is about 10 to 20 years. And they want you to hold on for long term so that you're here for 10 to 20 years. But if you want to sell, you can, right? So they can't account for the fact that maybe in 5 years you want to sell this thing, even though they're going to talk to you extensively when you're going to buy this property about how they want you to hold on for a while, because that's when they can really reduce the risk completely. So they don't put appreciation into this investment. Right now, Jacksonville in the short term is actually appreciating close to 10%, which is nuts. right? Like it's going higher than that. I think last year was closer to 20%. And they know that because of the months of inventory and the velocity of inventory are under a month of inventory in the market. And the equilibrium for that is 7 months of inventory. But the average appreciation rate, when you look at it for 20 years, right? And you look at it even before the recession and after, and you look at a snapshot of 20 years, is 4.3%. So if you were going to say that you are going to hold on to it for 10 to 20 years, and you can count on the historical average, and you put 4.3%, now this number shoots way up right here. This 23, it goes from 7 to 23. And the reason why is because of leverage, right? Because in this scenario, you're putting down 25% on a property. So you're putting down 25% on 180, but you're getting the appreciation of 4.3% on 180, right? So like if 25% of 180, I'm going to do some quick math, is actually $45,000. I think that's real. I think I just did that. But you're getting the appreciation of $180,000, right? That's why it accounts for this extra 16% that goes up. So if you're in it for the long, if it's just going to be historical appreciation, even though right now you're walking in with a little bit of house money because it's going higher than normal, you can count on this 4.3%. And this is the type of return that you get overall the day that you're going to, like move on from this or sell it or whatever, thanks to appreciation. That being said, Jen and Rene, you guys have seen a bunch of appreciation happening in your properties, but that's not really affecting your life right now, right? Like you're not spending appreciation money. You're just happily like, how do these investments affect you right now?
Well, it's nice to know that I can pretty much count on with these 3 properties, we're making cash flow on average about $800 a month. So that's just going into the savings so we can apply it toward the next property.
Yeah.
And I think I'm close to 36,000 saved right now.
That's awesome.
I'm hoping by the end of the year, God willing, that I have 50K to save and put on the next. So it's just feeding into itself. I'm trying so hard to make my money work for me.
Yeah.
We also have stocks and, but I can't touch that until I'm 59 and a half. I know that there's the SEP IRAs, which is an option, but for whatever reasons, I haven't gone that route. So I'm just taking the monies that I can save and accumulate without pulling from other resources and just putting it back into real estate.
I mean, it sounds like this is a retirement play for you, right? This is like a wealth creation. Maybe one day it buys your dream house in Hawaii, but this is money that you are setting to make wealth long-term.
Yeah, for sure. I mean, I'm so lucky. Both of my grandmothers are 97 years old. I have 2 97-year-old grandmothers. How lucky am I? That shows me that I'm going to easily live to be 100. Again, knock on wood, right? I better have the money saved up. I'm 50. I know I've got another 50 years. I better do something now because otherwise I'm going to be trying to rub 2 nickels together. And that's not a comfortable feeling. We're going through that discussion right now in my family of my elder grandmother trying to put her in a nursing home. And it's heartbreaking. There are changes that are going to come on in life. And I want to make sure that when the time is right for us, that we have plenty of money to sustain us and take good care of us as we age. And that's the truth. Yeah.
Yeah, that makes a lot of sense. And, Greg Stone is putting here that you're blessed with some longevity, which is great, but it has its things that you need to prepare for. Marilyn Cotterman from Homosassa, Florida asks, are you paying down any of your principal with your cash flow or just accumulating all funds for turnovers and or down payment for another home? Sounds like it's the latter, right?
It is, because I figured I could take the money and pay down the principal. But quite frankly, with the way the market's going right now, now's the time to buy. Maybe as things fluctuate in the market, interest rates go up. I don't know yet, but right now I'm in accumulation mode. We're in accumulation mode.
Cool. I like it. I'm in the same boat. All right. So Miguel Ducase asks in the chat, he said that $45,000 down payment, that doesn't account for closing costs, right? So I'm just going to review it real quick in the spreadsheet. And, oh man, you know what I forgot to do? Because I'm turned around and it's not my usual thing. If you go to jwbinventory.com right now, you can download this spreadsheet, and you could have followed along at home. But if you want to go fiddle around with the spreadsheet, it's completely interactive and you can grab it for yourself. If you go to jwbinventory.com, I'll put it in the chat in a second, you can do all the stuff that I'm doing right now, right? So what I did just now is go from the summary page that has the main thing. I went to this analysis in conventional financing. And Miguel, here's the answer to your question. This accounts for a 25% down payment. And with a 25% down payment, boom, I did it, the math, 45,000. And it also has right here estimated closing costs, right? So yes, that $45,000 figure that I said is without closing costs, but it is accounted for. So the total initial investment to buy this house, if you wanted to do it at 25%, would be about 49.5, right? And then here's still showing with the appreciation, right? But so it's completely interactive with everything you do. And listen, there's another option. You can also do 20%. The 2 homes I've bought have been at 20%. And when you do 20% down payment, it again recalculates, right? Now that makes your down payment 36,000, closing costs still around the same, total initial investment of 45, and your ROI. Let me go back to.
It's still positive even when you put less money down. It's doable.
Yeah, you put less money down. And you know what's interesting is that when you put less money down, the cash flow, the monthly cash flow goes down, still positive, but it goes down. But the ROI goes up, right? Because you're actually getting more leverage. Now you're not putting in 45, you're putting in 40, and you're still getting the appreciation from 180,000 and the long-term gain, right? So that is the stuff that you want to think about. And if you want to work through that stuff, number one, you can go to jwbinventory.com and fiddle with this thing yourself. And two, if you want somebody to do it for you, you need a pro, then go to chatwithjwb.com and they can walk you through all these different scenarios. Jen and Rene, I know that you have a big presentation to give in about half an hour, and I want to set you free. I am so grateful that you made time for us, being at a conference, about to give a keynote speech. I've been there. I'm usually freaking out. There's no way that I could do this, but it just shows that you're a pro, right? So I'm so grateful that the two of you were able to join us today. I'm super grateful for the 40 people plus that joined us on the call. It never goes without notice that you take an hour of your day, middle of the week, hang out with us. It's really incredible to get to spend time with this community week in, week out. If you're new to the call, I invite you to join us on Tuesday. I invite you to join us in the Facebook group, but I invite you to join us on Tuesday's call. And Tuesday's call is actually really interesting. We have the CEO of a Fortune 500 company joining us on Tuesday. He is the CEO of FIS. I can't believe I'm just blanking out on his name right now. Hold on. Gary Norcross. Gary Norcross. He's the CEO of FIS. That's a fintech company that recently moved to Jacksonville. And right now they're building $160 million headquarters in downtown Jacksonville. So we're going to talk economic development for downtown Jacksonville, what it means for real estate investors, why this means that all of these numbers could get better for anybody that's investing in downtown Jacksonville. And at the end of the day, man, there's only 500 CEOs of Fortune 500 companies in the world. Like I'm pumped just to be able to be in the same space as this guy and just pick his brain about how how do you get recruited to a city, right? Are you like LeBron James and everybody's throwing out their best pitch? What are the incentives? Why Jacksonville? What he thinks is going to happen? So I really invite you all to show up on Tuesday, have the chance to pick the brain of a Fortune 500 CEO. And last but not least, I just, once again, Jen and Rene, I want to thank you so much for this. This is awesome. I love that we have actually, we've become friends, right? Like from a work interaction that I get to do this stuff, you are now close friends of mine. I feel like that's kind of happening around us, but I really treasure our friendship. I can't wait to see you next week. And I'll give you here last words for anything you want to say here to the community. And I just really appreciate it that we got to spend time again.
Oh, I know, right? And truly, guys and gals, this is a family. Okay, here's a funny little story of something that happened a couple weeks ago, okay? Right. In the chat, Leo, I think you were on there. We were talking about how Leo had not been to Monterey, and he's only an hour and 15 minutes away from me. Come on. And I was I wrote in the chat, Leo, you and the entire family are welcome to visit us anytime. Hit me up. And then Lee Bishop's Jen, I'm feeling a little left out. I'm no. When I said you and the entire family, I meant the entire Not Your Average Investor JWB family. We are family. You guys come see us. We got golfing, we got kayaking, we got the aquarium. Like, come on, and we'll have a great time together. Now, if you want me to come up to the Bay Area, fine, but your traffic sucks. Just come down and see me.
There are not many places more beautiful in the world than that Monterey Peninsula, man. You don't have to talk me twice into it. I'm super into it. And we're going to post in the Facebook group where we're hanging out next week, right? We're going to be hanging out with Greg. We're going to go grab some happy hour here in Atlantic Beach. We'll post it in the Facebook group. We'll open it up to those of you that are in Jacksonville. You want to come hang out in person, go to jwbfacebookgroup.com and join the community and hit up Jen and Rene. They're about to start having meetups, I guess. I hope Greg doesn't listen to this and then gets mad at me, but why would he? Thank you. You guys are the best. I appreciate you so much.
Anybody in trouble? I'm just here to connect with family and show some love. I mean, isn't it great that we are, look, there are good and bad things that have come out of this pandemic. One of the good things is that we have used online telecommuting to connect with other human beings that we otherwise would not. We are in a renaissance time right now. Let's all connect. Let's all be friends. Let's all be family, because we're in this together. And let's face it, we're all going to grow together. We're all going to learn from each other, and we're going to be clinking champagne glasses in 5 years, 10 years, 20 years going, aren't we glad we did this? So let's do more of it, please.
I got nothing else to say about that. That's beautiful. See y'all later.
This has been awesome.
Thank you.
Always.
Take care.
Okay.
Good looking guy. Good looking fella. All right. See ya.